Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. The telephone number here at the studio. We talk about mortgages a lot on the show, as well as the real estate market and what's going on out there. I'm Jeff Barton, and with me in the studio is Daryl, of course. The amazing Daryl, the insane?
The insane, amazing Daryl. I'm going to add the amazing part just because...
No, you got to have the amazing part. No. Anyway, thank you for tuning in each and every week. We're on, and we try to bring to you some information about what's going on in the market, what's going on in the mortgage world, how we can offer you some solutions. Today is no exception. We have three terrific guests who are going to be on the show. Robert Childs, who's not been on the show, talking about debt solution and how he can help you with some of his solutions. I'll let him talk to you about that. Tracy Madden from Temecula is going to talk about what's going on down there in the Southern California market. Beautiful down there. I've raced down there with a couple of Ragnars that I've done over the past few years, but it's beautiful, and she's going to come on. And then from Atlanta, Georgia, Luana Bradford from the Bradford Group will join us once again to talk about some different market, a little bit of Southern hospitality. She'll share with us what's going on in that particular market. As most areas of the country will demonstrate, we are in a very unusual market once again. Let's see, new housing starts. They came out, and for the second quarter, I think it was 850,000 housing starts, but unfortunately, we need about 1 million a month in order to keep up with demand. And what's going to happen is we predicted last week. I read several articles about it this week talking about we're not going to have enough houses on the market. At the beginning of the year, what we saw in the trend, both nationally and locally in Riverside, San Bernardino counties, I want to say hi to KTLA fans, as well as KCAA and K-Tahoe, all our great listeners who tune into the show to hear updates about their local area and what's going on nationally. We saw that in the beginning of the year, what we had was a slackening, a increase in inventory as a result of the prices, which had skyrocketed in last year, and then at the beginning of this year, they flattened, and it also increased the number of houses that were available on the market. Buying was down in February and March. Could be due to the weather, could be due to a lot of different things. But what we've seen in the last 3 months, and certainly the second quarter, probably going to go into, and as they say, October this year, we're going to see bidding wars again. Why? Because we just don't have enough inventory. Why don't we have enough inventory? Because, quite frankly, they're not building enough houses. And as I demonstrated in that number of 850-some-odd thousand houses or new housing starts that we're going to probably have this year, it's short. It's short a couple, 300,000 houses. And that simply means because we have a group of events taking place, right? We have this housing issue that has been going on really since the recession, 2010 and onward. We are just not building enough houses for the demand. Even though the millennial generation is not buying houses the way they should because of college debt, because they can't find the right job, all kinds of different reasons for that. But even at that low demand of that great big number of people, the millennials, we are seeing housing not being built. And the reason of that, of course, we've talked about it many times on the show, the sting of the recession never seems to go away. And the risk that a builder will take. By the way, the entitlement process. Let me just halt the show here for a second. Have you gone through any of this, Daryl? Trying to build something or put an improvement into your house? Anything like that recently?
No, not recently, but a lot of people have with the fires here that took place like a year ago.
Perfect example. Okay. There are state regulations, county regulations, of course, and your local municipality has regulations as well as a number of other impediments to you doing what the heck you want. Now, many people move to areas that they think that they can do what they want, i.e., I got a garage, it's 3 cars, I only need a 2-car garage. Why can't I just convert the third bay to a bedroom? Why can't I do that? And why do I have to go through the permitting process? Anybody out there familiar with that? Anybody out there thinking to themselves, yeah, that's what I did? Well, right, you and me both have problems if we want to sell the house or if the city decides to crack down on code enforcement. This is the long and short reach. Short meaning short-sighted, long meaning they can come in and do what the heck they want. So my wife, about 3 weeks ago, she's driving down the driveway, and there's some guy poking around out in the front. Now, anybody who has a house like mine, I'm down a flag lot, and the house itself, most of the utilities are shut off at the street level, which is probably, 400 feet from where my house is. So she sees a guy with his work shirt on, poking around our utility shutoffs in the street. And she rolls down the window and says, hey, I guess you don't roll down the window anymore. You power down the window. Have you seen a car with one of those crank windows?
No.
No, exactly. They don't exist. So she powers down the window and says, hey, can I help you? And of course, as all polite people do, that's kind of the way to say, hey, what are you doing? Get off my property. They'll just say, hey, what are you doing? The guy says, oh, I'm, here looking for a water leak. He says, you're looking for a water leak? Well, who are you? So he digs into his pocket, comes out, and there it is, city of wherever I live. The city card comes out, and he's some inspector from some city department out inspecting a water leak. And we're saying, well, we don't, my wife says, we don't have a water leak. Well, what are you doing? Well, there's a water leak out here, and we got to track it down because the aerial photos show that there's water on the side of the hill. And I'm thinking, why is my wife talking to this guy? And who is this guy that he wouldn't make an appointment or call? He just shows up. Well, that's what happens if there's an issue with the city based on whatever they consider to be a problem. Fast forward to we're trying to put solar panels on our roof. Okay, solar panels on our roof. We started, this was after the fire, and where I live, there's a lot of wind. Any wind out there? San Bernardino, Riverside counties? Hello? Yes, you have wind, lots of wind. Well, you can use that wind if you have any kind of windmill, or do what we do, get solar, and we want to have a battery that operates independently of the power source if the power shuts off. So we always have power, right? Doesn't that make sense? We started the project in January. We are just now getting permits. And I'm thinking, okay, we have a permit to put solar. Everybody wants to do solar. And by the way, there are 6 companies involved in the installation of the solar. It's unbelievable. So each one of these companies has to go to the city and find their particular piece of the pie and get it permitted. The battery company, which is a completely different company that installs the battery and upgrades your panel, they have to get a completely different permit. Now that's going to take another 3 weeks. The install to the battery may take a year. You wonder why there's an issue. Is it me, or does everything have to do with somebody reaching into your pocket and pulling your last dime out before you can get something as simple as trying to get power for your house, a backup, because you can't rely on the wind because Pacific G&E, or what is it, PG&E, is going to shut off your power at the least wind because every time there's a fire, they blame it on them and charge, sue them for billions of dollars. So here I am, a consumer, trying to help the problem, trying to green the planet, trying to provide my own electricity, and what happens?
Until DWP or Edison approves it, you can't even turn it on.
It's unbelievable. It's just one of these things where you shake your head and go, every municipality, the permit required a 13-page plan. This is solar panels on your rooftop. I'm not building a new house. This is a guy's putting brackets on your roof. You ever had track lighting back in the day? You know what that is.
Of course, yeah.
Right, exactly. You put up a strip and you hang the light. That's it. It's not a big deal. It's similar to what solar is. There's no issue with solar. You get a roofer out there to fix any holes. You put the brackets on. You attach the solar panels. That's it. 13 pages that had to be stamped by 5 different departments in the city. Drives you nuts.
A label on it that says Jeff Barton's nuclear plant.
Nuclear, exactly right. It makes you crazy, and you wonder why people are so angry, they just don't want to do it. They would rather be illegal than to try to do something legally to improve their property and secure power in their house when there's bad times, either a hurricane, a tornado, rain, earthquake. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's our telephone number here. If you pick up the phone and give us a call, as I've said many thousands of times, we try to help you with solutions, not just my opinion or not just selling me. I don't know everything. I've been in the business about 25 years, but there are scenarios and different circumstances. That's what makes our business fun, to be honest with you. Solving problems for people who have unique situations that you've never heard of. Now, there are many times I've heard of these things often, but we do come across different types of problems that, need different types of solutions. And a guy who has some great solutions to problems for you, a guy I just met named Robert Childs, he has a company, yourdebtsolution.org, and he joins us to talk a lot about what he does and how he helps solve your debt. Robert, how are you?
Very good. Thanks, Jeff.
Was that too cumbersome, the introduction? Was it not smooth enough?
Yeah, it was very smooth.
Okay,
Very smooth.
Excellent. Okay, so you have a website, yourdebtsolution.org. Tell us and tell the people who are listening what you do and how you help.
Definitely. We help in a very different way. We're not debt consolidation, but we do debt settlement. Difference is debt consolidation, Jeff, is paying back on-time debt or charged-off collection debt over a period of 2 to 4 years. Debt settlement means right now. So in our world, it has to be in collections or charged off, as they would say in the credit card world,
right?
Where the person hasn't made a payment on it in more than 6 months, a year or longer, and they're trying to buy a home. So the lender says, hey, based on your debt-to-income ratio, Mr. Smith, and your credit score is being bad, we cannot approve your loan until this $10,000 charge-off collection debt goes to zero. So in that example, we'll work with the client and the creditors directly, or in this case, a collection agency or law firm, to settle it for a much reduced amount, meaning that they're going to pay a lot less than what they owe on that collection debt. In debt consolidation, they'll pay back 100% of the principal balance over time. So usually in our world, not usually, it is, that will make a one-time settlement offer to that creditor or collection agency. So, for instance, if you owe $10,000, we have to get down to $3,500. And we say, Jeff, write a check for $3,500. It's a done deal.
Right.
And it's geared for people who are really trying to buy a home. They're in us, or I need this thing taken care of right now. So, after that's finished, on the reduced basis, we'll send the final settlement letter to the underwriter or lender, and they can rapid rescore it and improve the FICO score an average of 100 points on that size of a debt, for example. So, and put the client in a better debt income perspective and a better credit score.
I think that's a miracle if you can do that, okay? Because I've had charge-offs in the past. I don't think there's anybody listening to the show who hasn't had some difficulties paying a bill at some time, whether it's their fault, whether it's not their fault, but everybody has that. How do you get somebody you owe money to agree to less? Now, obviously, that's your business, but give me some ideas to what you do to do that.
Mm-hmm. Well, sometimes it's good old debt negotiating, or in most cases, I would say about 30 to 40% of the time, our clients may have what they call an FCRA violation on the report. For instance, let's say if you owe a bank, I won't name any banks, $10,000 as a charged-off collection status, but they sell it to a debt buyer, known as a collection agency. If they sell it to a debt buyer, the original creditor is supposed to put a zero balance on the trade line on the person's 3 credit reports. And that doesn't happen in some cases. So if it says $10,000 on Bank of America or Citibank, and it says $10,000 with a collection agency, the credit bureaus think you're $20,000 in the hole. So that's a common one.
I
Where
see.
if the creditor sells it, they're supposed to put a zero balance, and we can use that against the creditor or collection agency to say, Mr. Creditor, you're going to take 9 cents or 8 cents on the dollar, plus I want a deletion letter. If not, then we'll work with our national law firm partner that will sue them for FCRA violation. If that happens with the law firm, they will not only get the creditor and collection will get $0. They'll have to be removed, and the creditor or collection agency will have to settle with the client, known as an FCRA violation of a few $1,000s. So the client can get paid from the bad guys, and that's the commonality. So usually when we detect an FCRA violation, it's one of the first things we look for.
Right.
Is there some kind of discrepancy, balance, charge-off date, things like that. That there's probably about a dozen reasons why it would be an FCRA violation we can use against them. And they don't want to pay out. So
Right,
they're more
of course.
likely to take a very low settlement and a deletion letter.
No, that's very interesting, and I agree with you. I think most people who are in the debt collection business, which is what you're saying, right? Somebody's owed, they sell it to somebody else. They're probably buying it for pennies on the dollar anyway. So what they're looking for is something to, rather than nothing. And they certainly don't want to fight you and go to court and lose more money, right? I mean, that's what you're talking about.
Right. Yeah, exactly. That happened to a client of mine back in January of this year. She owed a bank about $19,000. They reported it actually a wrong amount. They reported $27,000 on her credit report. That's another FCRA violation. So it's like being that much deeper in the hole with a collection account,
Right.
which means that she probably lost an extra 50 points on her FICO, for example. So anything that we can do to find that. Now, if there are no FCRA violations, nothing wrong with it. It's just good old debt negotiating that comes into play. That will do that. And we average between 25 to 35 cents on the dollar negotiating. The only debts we can't negotiate on would be government student loans, maybe private, but
Right.
not government student loans, taxes, and child support payments. That requires an attorney.
I see. And now you've been at this a long time, right? I mean, this isn't your first company. You've built companies in the past and done this for a long time.
Yes.
Give us a brief history of how you got into the business. I mean, obviously you sound
Yeah.
very educated in it and obviously here to help people, but how did you get involved with it?
Oh, God, yeah. I even trained credit restoration companies in the same type of fashion, webinars and live events. I started a credit restoration company back in the early 1990s.
Right.
Built that up over the years for 22 years, and I sold it to a bank back in early 2012 during the bad real estate market crash, I call it,
Right.
recession. And then shortly after that, or even during that process, I was actually doing debt settlement at absolutely no charge, charging no fees whatsoever to my clients, so that it would better their credit score.
Right.
That's the emphasis of credit restoration, is to clean it up and make, improve their FICO score. That's why their clients paid us to do that. And then I said, God, I have to be getting paid for this. Plus, back then, I had it up to here with credit restoration. That's why I sold the company.
Right.
And jumped into the debt settlement arena back then. So it's been several years. So it's been amazing. We work with all sizes, large debt, small debts, business debt. It's amazing what we see out there, because one article I read on CNN website that says that the United States has 8 times more credit cards in our wallets than the whole world combined.
Oh, unbelievable. Yeah.
Obviously, yeah.
I have 3 or 4, that's for sure.
Collections, things like that.
Right, exactly. Hey, how does someone get in touch with you? I know I mentioned the website, but if they wanted to talk to you directly, how do they do that?
Sure. Yeah, I'll tell my number twice. My number is 949 area code 371-8885. It's also on the website. Again, 949-371-8885. We always give folks a free consultation, Jeff.
Okay.
One thing I want to reiterate is that we have a minimum requirement of a $5,000 collection or charge-off debt per any single account.
Okay.
But if someone has like a $500,000 debt, I'll still talk to them. I'll tell them how to do it themselves for free. The do's, the don'ts when you're dealing with collection agencies, because you are being recorded for quality assurance when talking with these guys, and saying the wrong thing could be used against that person in the court of law at a later date.
Of course.
You have to be careful. Yeah. And again, it must be, the person also has to have a little money is set aside. At least 70% we recommend of what they owe to settle that one-time debt. Again, it's not debt consolidation. And we also never, ever charge advance fees. It's all based on performance. You can't do it, don't pay me. If we do the settlement, get it done, but you don't like it, don't pay me. That's simple. So we never charge advance fees, not even a setup fee.
Robert, thank you very much. That's great information. I hope people out there will take your number and give you a call or go to the website, which, of course, is yourdebtsolution.org. That's Robert Childs, and thanks for coming on the show.
And they're also welcome to text me. That has a text capability, even though it's a landline.
Great.
Thanks very much, folks.
Thank you very much. And I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's our telephone number here at the show. If you pick up the phone, give us a call. As we always say, we can help you. We have a lot of solutions here today, and I'm really excited about our next guest. If you do want to get in touch with us, we, of course, are info@malibufunding.net. That is my email address. You know the telephone number. If you want to text me, you can do that too. You can find me on YouTube. My Twitter handle is @Jeff6493. I do a Mortgage Minute probably once a week on that if you wanted to jump in and see what I do. We are all over social media, but we are not all over our Southern California area. So we bring in experts in the field, especially in Temecula area, and today is no exception. We bring back to the show Tracy Madden from the Sperry team. Tracy, how are you?
I'm doing well, Jeff. Thank you. How are you?
I'm fine, and thanks for coming on the show. I know that I kind of called my guests at the last minute, and I did it to you probably too, so I apologize about that.
Oh, that's okay. It's always a pleasure to be on the show.
Yes, thank you. Okay, give us an update about what's happening in your area in the real estate market. I've had some different opinions as to what's going on with housing and what we're talking about maybe getting into bidding wars in the fall as housing tightens. But what's your area like, and tell everybody where you're working currently.
All right. So I am in the Inland Empire, which I work specifically in the greater Temecula Valley. So
Right.
Temecula, Menifee, Murrieta, Lake Elsinore, Hemet, those areas.
Right,
This market this summer has been on fire.
right.
But I have noticed a little bit of going into summer, we were in what I would consider a balanced market.
Mm-hmm.
Usually it's a buyer's market or it's a seller's market, but
Right.
every so often you hit that balanced market. But I'm starting to see prices are starting to go down. I'm starting to see a lot of listings with price decreases on them. So I think we might be shifting a little more into a buyer's market. Personally, that's my personal opinion.
Oh, that's very interesting. The national trends, and maybe it's because it's, a pocket, an area, maybe a certain type of thing. What's housing like in terms of supply? You're talking more of a buyer's market, so that means there's an oversupply, maybe more like 5-6 months worth on the market?
Yeah, definitely 3 plus months
Okay.
worth of homes. But I am in an interesting pocket. I'm right between LA and San Diego.
Right.
So prices are a lot lower here than you would traditionally see in a lot of other parts of California.
Right.
We also have a ton of new builds. They're going up all over the place, new homes being built. So I feel like we have, I'm looking at my market watch right now, and
Right.
there's 187 new listings.
Okay.
Um,
Sounds like a lot.
and there's 152 closed in the last 30 days is what I have mine set to. So we've got a lot of business going on. I feel like we do have a lot of inventory. So yeah, we are in an interesting little pocket here in the valley.
Tell me about the builders. Who's out there? Horton, Pulte. Who else is out there?
Lennar,
Right.
Lennar going up, yeah. So
And you're saying they're building a lot of houses? When you say a lot, what do you mean? 100, 200, 1,000? Are there huge developments? What's going on?
So I've seen a lot of add-ons to current areas.
I see.
For instance, the lakes. The
Mhm.
lakes, they started building in 2005, right before the market crashed.
Right.
But then they put some more in 2012. And then they put some more in 2015. And now they're doing another tract of, 140, 150 homes,
Right.
to come out in 2019, 2020. So I'm seeing add-ons to neighborhoods. I also saw up between Menifee and Hemet, there's a road called Dominigoni,
Mhm.
and I'm starting to see a lot of completely new tracks going up in there. And then I saw some signs the other day saying that there will be even more new tracks coming soon in 2020.
What's the price point for these houses? As you're, I guess, talking about it now, it piques my interest because I don't see where I live a ton of new homes, and I'm always interested when they're building large. I guess tracks. 140 is pretty good size. What's the price point of that? 300,000-400,000, more or less?
I'd say they're around the fours.
I see.
Low to mid fours. The thing to watch out with those, though, is the tax rate. I've noticed the tax rates are coming in around 2.1%
Wow.
in these new, which is crazy to me.
How can they do that? I thought the tax rate was fixed.
It's, I think it has a lot to do with what they're putting in terms of parks, schools, etc.
I see. So it's more like a Melrose type of charge onto the taxes.
Yes, exactly.
Well, that's a big number, 2.5% of, and that's a yearly, right? And that kind of sticks with the property for many, many years.
Yeah, it sticks around for a long time. I mean, the homes that were built back in '05, they're down to like a 1.9%.
I see.
1.8, 1.9. But you've got the new ones popping up, they're 2.1, 2.2. So.
Right, and the cities put that exaction in there because they don't want to come up with the infrastructure, whether it's water, whether it's sewer, like you say, schools, sidewalks, lights.
Street lights, yeah, everything.
Right, exactly. Do you find the permitting process, we've talked about this a little bit on the show today, do you think that the permitting process is quick or slow in terms of what they're developing, whether it's a single-family stick-built or whether it's these larger construction properties?
You know, I don't feel educated enough on that particular bit to answer that. I'm sorry.
No, that's okay. I mean, the only reason I asked is because a lot of people want to be able to add on to their own homes, maybe build a guest house or an extra bedroom or convert a garage a little bit. And the permitting process always seems to be dragged out a long time, and the cost is a lot, and there's just, it just deflates the whole purpose. I know in LA County they were adding those garage units when they had a housing shortage, which were supposedly streamlined. Are they doing that there?
So I did see something about that, like the granny flat.
Yeah, right.
Not traditionally, but what I've heard in the past is that it is a pain to get permitting.
Right.
But I did hear recently, and I can't remember where I saw it, so I don't know how, the validity of the statement, but I did see that they were going to make it easier to start adding these granny flats to homes. But again, I can't speak with conviction about that.
No, that's okay. I mean, it's just a general trend that most cities want slow growth, right? So they make it really, really difficult for you to do anything to your current property. I know that I'm in a burn area, right, where the fire came through and burned everything around my whole neighborhood, and they're really restricting what you can do once your house burned down. To return it to its former level is, an 8-9 month process for permits. And then if you wanted to do something different, it could take you a year and a half. Now, that just seems wrong to me.
I agree with you. That's terrible.
Yeah, I think it is too. We are talking with Tracy Madden from the Sperry team down in the Temecula and Hemet area. Tracy, could you shout out your phone number or a way by people can get a hold of you if they need a terrific real estate agent in that area?
Absolutely. My phone number is 951-609-4077. You can find me on Facebook and Instagram as well. Just look for Tracy Madden Realtor. And I would be happy to help anybody with their housing needs.
Listen, I have one more question for you. Where do you see the market going in the next, I guess, through the fall, because we're going to start getting into this election cycle, and you know how people get crazy with that, and they tie up all their ambitions and hopes and dreams into one sort of thing, whether it's a political candidate or a cause, and it kind of slows down the market in a lot of ways. But what are your ideas about through the fall where the market might be headed?
I think we're going to see, at least in my area, I think we're going to see a slight dip in prices. I think we're going to see homes sitting a little bit longer. I'm hoping that the interest rates are going to stay low, like they have been,
right,
and that's going to create a lot of buyers. I'm hoping to see a buyer's market come up.
Yeah.
That would be nice.
Yeah, it would be nice. Tracy, thank you very much for coming on the show once again. We really appreciate it, and you always give such good, concise answers. Thanks very much.
Thank you. You have a wonderful day.
And you do, too. And I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is the telephone number. Pick up the phone, give us a call, talk to us about your problems. Maybe you have some answers for some of the questions you might have heard on the show already. We'd love to share it with you. Love to be able to get you on and to be able to talk about it. We don't take a ton of calls on the show. We usually call back afterwards. So if you don't get through, do not be disturbed. We will get to you. We will get to your questions, and we will try to point you in the right direction. We certainly don't have all the answers, but most of the people that come on the show have some, if not all. And this person is no means an exception to that rule. Luana Bradford from the Bradford Group joining us from Atlanta, Georgia. Luana, how are you today?
I'm doing well, Jeff. Thank you. Thank you so much for having me back.
And thank you very much. Okay, the ATL, what's going on down there? How's the real estate market? And, what do you think?
Real estate market. Actually, believe it or not, it is still a buyer's market.
Okay.
Where our housing shortage is increasing.
Yep.
And it's like, even though the builders are out there, we've got new construction going up. There's some talk that the builders are having a little bit of lack of confidence in the market right now due to increasing labor shortages,
right,
and rising construction costs, all of that playing a part in, creating affordable housing for the buyers.
Okay, labor shortages. Let's address that a little bit. Do you think that the immigration policies set forth by the federal government is affecting the pool of labor, or is it mostly union labor there? I just don't know.
No, I definitely think that has a lot to do with it.
Yeah.
People are afraid to come out now, and so.
Yeah, I think so too, and I think that I don't know what the answer is. All I do know is that like you're saying, there's shortages of housing all over the U.S., and a lot of it has to do with the fact that there's just not enough workers to do the job. Now I don't know whether that's because the people that are working don't want to work in construction, or the people that do want to work in construction haven't got the legal capacity to do so. But housing shortage is a housing shortage, and it's affecting your area as well.
Yes, definitely. And the other thing is, even though we have the lower rate,
yeah,
just as you know, the cost of the average household income has not kept up commensurate to rising home prices. So that's kind of scary, because when you think about just in Atlanta, the median house is around $300 to $325,
wow,
but the average annual wage is $49,000 a year.
Well, there's a problem there, obviously. So you need basically a two-family income to afford that kind of house.
Yes.
Right, and if
you don't have any debt.
Or you don't have kids in school, or you don't have, 1,000 other things you got to take care of. No, I think that's absolutely right. When you're talking employment, who's a major employer down there?
Well, definitely the federal government. We've got several federal agencies here. MARTA, Coca-Cola.
Right.
So we're headquartered we are the home of a lot of major businesses. here.
Well, business now. What's your hourly wage in Atlanta County, basically? What is it? Fulton County? No, what is it?
Well, yeah, you got Fulton, DeKalb, but it's averaging around $16 an hour.
Mm-hmm. So it's a little bit beyond what we're doing out here in California, which a lot of the cities out here have gone to $15 an hour. Okay.
Yeah, but I'm not talking minimum wage. So I'm looking at total average. Just
I
like
see.
The median. Yeah.
And
we're below you as far as minimum wage.
right. Well, we're talking. Let's say LA County. They're inching it up. I think by 2022 it's supposed to be 15. I think San Francisco is 15. Some of the other cities, maybe San Diego, but a lot of the Inland Empire, a lot of the rural areas in California, they just can't afford that kind of. You basically, if you want $15 an hour, you're going to employ less people. So it's a real bear. I'm not really sure what's happening, but it really affects how people can afford and what they can afford. Major home builders down there, are you seeing a lot of home building in the area by, like, say, some of the larger companies, D.L. Horton or Lennar or, I don't know, any of them?
Yeah, there are, but not like it was about 15 years ago.
Oh, no.
18 years ago now.
Right.
But
No.
They are building, but one of the things I've noticed is before they would build, and you might be on, a half an acre to an acre. That was like the average size lot about 18 years ago.
Right.
Now you can reach out and touch your neighbor. I mean, they are just cramming as many homes on that acreage as they can.
Yeah, that's called high density, and I don't know if that's good or bad. I don't like it. I like the bigger lots. I just think it makes for a nicer neighborhood. But if builders fighting costs and trying to maximize what little income they can make, because none of these builders make money unless they're selling 1,000 houses, and land acquisition being what it is, you're going to get high density. That's just kind of what it is.
And speaking of high density, the other thing is with the whole mixed use development. So you have actual subdivisions that are comprised of, at the front of the entrance, you have the storefronts at the bottom, apartments on the top. You go further in, then you get your townhomes, and then towards the back of the subdivision are your single-family homes.
Is that successful?
So you've got, I kind of question it because you have such a mix of people.
Yeah. Oh, I see.
And just,
that's a good way to put it. You have a mix of people. Yeah, exactly. Hopefully the mix will be okay.
Diversity is good, but I'm just thinking, that person is buying a single family home versus, the person in an apartment complex.
Right.
It's just a little bit different. I have no idea what one will do to the other property value.
Yeah, and that's always, if you're buying, you're concerned with property values now and in the future. And if you're renting, you want the lowest rent possible. So who's that attracting? I hear what you're saying.
Mm-hmm.
Yeah, and I don't know whether, a lot of neighborhoods, I guess across the country are flirting with that idea of trying to mix it up. I like mixed use just because I like the fact that it reminds me of, New York City or Philadelphia or Chicago, where you have brownstones, and you may have a storefront or a restaurant downstairs and you live upstairs. That kind of reminds me of those areas. But I don't know if it works in Atlanta.
Well, yeah, New York, that makes sense, like you said. They're brownstones, but they're not single family.
No, that's true. You're right.
It seems like they're just trying to just put everything into this pot and call it a subdivision.
Yeah.
Even with that, I don't even know how that works with HOAs, and
it
just seems to be a little convoluted here.
Yeah. Okay. Tell us what you're doing and how you're doing. I know you had your hand in a lot of different areas in our business, but we have a couple minutes left. Why don't you give me an idea of what's going on with your particular business?
With my business right now, believe it or not, I'm getting more inquiries on the investment side than the homeowner side.
I see.
And if it's homeowners, they're individuals that are looking to just stay where they are and rehab, so it's more your your cash out refi.
Yep.
Or you're looking for a HELOC because it's more affordable to stay where you are, more house,
yeah,
and rehab it, then go somewhere else and get less home for more money. So that's what we're experiencing right now.
I see. And I've asked a couple of guests on the show today about permitting process and the way that the cities are involved so heavily in every aspect of what you're doing to your own property. Is it like that there as well?
It is, and thank goodness it is, because Atlanta, 20 years ago, had some of the worst building codes in the nation.
Oh, I see.
I mean, anyone could classify them as a builder. You get themselves as a builder. You go, you get your license, and you just do whatever. And it wasn't heavily regulated. So for me, I think I'm happy that they're involved in making sure that we are building to code and that we're building safe housing for individuals.
That's interesting you say that, because out here in the land of regulation in Southern California, we are so sick of it. We just want to, march down the street. But you're saying, no, that's probably a good thing, which I think is the basis for what all these laws are written. They're trying to help people. It's just the overburdening once it gets to a certain point. But I'm glad to hear you say that it's a good thing there. That's good.
Yes.
Hey, listen, Luana, thanks very much for coming on the show. You're always helpful and always entertaining. I appreciate it. Could you shout out your number and let people know how they get in touch with you if and when they need to have a great agent down there in Atlanta, Georgia?
Definitely. They can call me at 404-618-2824. That's 404-618-2824. Or they can visit our website at bradfordgroupmtg.com. That's Bradford Group, M as in Mike, T as in Tango, G as in golf.com.
Luana Bradford from the Bradford Group. Thanks, Luana. Thanks for coming on the show.
Thanks so much, Jeff.
Thank you. And I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's our telephone number here. If you pick up the phone and give us a call, we can try to help you with some of the mortgage or real estate-related questions that you're going to have. Interesting show today. I hope you've enjoyed it. We didn't get to rates and what they are and what they can be, but let me give you a couple of pieces of information about how to get in touch with us if you need to. If you want to email us, info@malibufunding.net. Malibu Funding NMLS number 79620 is the company that sponsors the show each and every week. Thank you to them. As I said earlier in the show, KCAA, KMET, and K-Tahoe, the three stations we're currently on. We broadcast throughout the week, but mainly on the weekends. And if you're driving around Saturday morning and you're listening to me or Sunday morning, thank you for tuning in. We do provide some information. We have a terrific lineup of loan officers at Malibu Funding. Their website is malibufunding.net, not .com, .net. And in my Twitter handle, at Jeff6493. And you can, again, listen to me. The show is broadcast at the KCAA and KMET each and every week, both video and audio, obviously, and on YouTube. If you go to YouTube, my YouTube channel is Jeff Barton, the Real Estate Voice, and you can see this as well as many other shows, as well as our Las Vegas Real Estate Show, which we are going to probably get another couple done in this month, although we did have a couple 3 months off. Reason for most of this is that when we broadcast the shows and when we get out there and shoot the shows, it becomes cumbersome to continually try to do it remote. So we have to travel to Vegas, and I just haven't had an opportunity to get back out there. But we do bring guests on the show like we did today with from Atlanta, Georgia, which was great. We had Luana Bradford on the show, and it's always good to hear the updates of what she has to say about different markets. That's what we try to do. Look, it's not that we're not centricated on what we're doing here in San Bernardino and Riverside. The great people that work out there, Malibu Funding has a number of different loan officers and real estate agents out there, but we like to give a national perspective. For instance, if you're selling your house here and you want to go move there, you might want to know what's going on there so that you have some idea rather than just guessing and picking out of a phone book or some kind of website, Realtor.com, a real estate agent or a mortgage broker in those areas. Malibu Funding is licensed in 10 different states, and they have real estate licenses in 2 states. So if you go to that website, MalibuFunding.net, you can find the information about where they're licensed and where they might be able to help you. And if we at the company don't have any answers for you, we can point you to people that do, as is illustrated by the number of real estate agents and other professionals who come on the show who are really our direct competition. But at the old Macy's and Gimbels, if anybody ever saw that movie back in the day, if you don't have it, you push them somewhere else, and that gives goodwill to the community and also answers to problems that are out there. I mean, look, there are so many different loan products out there, and I mean many, many different ones. There's a new one on the market recently, and most of these loans, like a no-income, no-asset loan, remind us of the days of yore when the economy was sunk by the mortgage industry and the lack thereof of oversight, and Fannie and Freddie buying these types of loans. Well, they don't buy these types of loans anymore. These are private market loans. That's why normally they're a point to 2 points higher, if not more so, than your regular rate that you can get with a Fannie Mae or a Freddie Mac loan. Those are called conforming loans. Let's talk about what the rates are. And these are rates that are kind of the average of what's going on in the U.S. as of today. Let's see, the 30-year fixed rate loan is about 4%, which is about an eighth higher than it was last week. Now, why is that? There are a number of reasons that are quoted for it. We are expecting this week or the upcoming week, or maybe it's the 27th, the Federal Open Market Committee meeting by the Fed, we are expecting a reduction. And that's been priced into the rates. Now, as everyone knows, the Fed controls rates on your credit card, your card note, a lot of short-term lending. The mortgage rate actually follows a little bit. It's mostly derived from bonds and the bond yield. Bond yields go down, the rates go up. Okay, I mean, the rates go down. So if, in fact, you're buying treasuries and you're watching that, or if you're looking at the treasuries, the 10-year note is what you're looking at. So as that fluctuates, so does the mortgage interest rate. But they're tied a lot of times, especially when there's so much anticipation about this time having the rate being cut. Now, the question of whether Jerome Powell is going to, and his Fed governors, 9 of them, are going to lower interest rates beyond the quarter point to a half point. I've heard anywhere from 25 to 30% of the economists that were polled said that they probably will go with a 50% cut, but most 70%, 75% think that it'll just be a quarter point. But there are so many mixed signals on what's going on in the economy affecting mortgage rates that I don't know. It's very interesting, and it's something to follow. But again, it is like I say, 4% interest rate versus 3.875 is still a pretty smoking rate, right? I mean, what are we talking here? An eighth of a point over 30 years might cost you, depending on how much you're borrowing, it's not as much as you think. Okay, so the FHA VA loans, 3.625%, again, up from 3.5%. Same thing. I mean, if you're getting 3.5% down and you are getting a great loan at 3.625%, that's great. And remember with the FHA loans, they will take credit scores as low as 500. FHA is not credit score driven. Now, the lender that you get your particular loan from may be credit driven, and that's one thing to check on, making sure that the lender you're choosing, if you have credit, let's say you got a 620 FICO score, and you're hearing me quote 3.625%, and you want to bring in 3.5% down, but your lender is quoting you something else, well, you might want to shop around. The reason is because they have their particular guidelines that they have set as a company. They could put anywhere from a point to a point and a half on top of those FHA guidelines because the lender is afraid of credit scores. They don't want to get stuck with the loan, so that's what they do. They make the loan more expensive and fewer people want to use them. But if you're out there right now and you're a good credit risk, maybe you had some health problems, maybe there was a loss of job and now you're back on your feet, but the credit score is still terrible, that's one thing that you can point to when you're going to a low credit score company. You can say, hey, look, this is what happened. This is where I'm going. I've been great on my paying of my bills for the last 18 months. As you can see, based on my credit report, you should give me the best rate. And you can do that. On a 15-year fixed rate loan, 3.5% to 3.625%. That's essentially where it was last week. And of course, your ARM products, let's just talk about the 5-year ARM, 3.375 to 3.75%, of course, depending on the lender. These are all terrific rates for you out there. It should help in the search for your home. I know I've said, and I've said this week as well as last week, that we're going to have some bidding wars in the fall. If you got a house that you're thinking of buying or you're negotiating right now, it's probably a great idea to get into something now before we get into next month, August, then September, then we're going to have these bidding wars. Anyway, thank you very much for tuning in this week. I'm Jeff Barton, your host for no, I'm not your host. That's a different intro, right? This is the Mortgage Voice with Jeff Barton, and thanks for tuning in. We'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.